With that, let's move on. We have Mithun Aswath, who's the managing partner at Kivah Advisors, joining us now. Mithun, thank you so much for joining in. I mean, we have seen a bit of rebound from the lows that we hit a couple of weeks ago, and from there itself, a lot of value buying, so to say, has emerged. What are your thoughts on the way forward for the market? And in that, I see PB Fintech as one of your recent preferred picks. Can you give us the rationale behind that?
Yeah, good afternoon, Mangalam. Yeah, I think, we've seen the market kind of rebound from some lows that we hit a couple of weeks back. Also, not only on value buying, but also we saw that, the RBI did not move on interest rates. And that also may be a signal that peak interest rates are behind us. And that also provided an impetus to the markets to move higher. We actually see that even US inflation may have peaked. The data in March also came in at about 5%, which is way off the levels which we saw maybe June last year over 9%. So even the Fed could be towards the end of its rate hiking cycle. They may have one more rate hike to go, but they may not do that as well, considering the banking issues happening in the US. So we are quite relatively positive on India. I think in the first few months of the current year, you saw flows move to China and because of the undervaluation. I think that has corrected, and I think from incremental flows may gravitate towards India, especially the emerging market flows could come back to India, because I think we are well positioned right now.
So if, incremental funds are coming to India, what are the attractive pockets now where valuations are still reasonable?
So I think Mangalam just spoke about one of the ideas that we are quite positive on is PB Fintech. This is basically a company which runs the marketplace called Policy Bazaar as well as Paisa Bazaar. It's way off the highs from the IPO and post-IPO highs. I think it's half from there. And its business, I think it definitely has legroom to grow, because the insurance penetration, both general and life, is quite low in India. And with the whole digitization and the growth there, you will see this company report faster than industry growth. Even in the current year, you've seen the premiums grow at over 50%. And I think the last 4 or 5 years, CAGR is also in that range. So they are at an annual run rate of close to 12,000 crores. And also their renewal premium has crossed 300 crores in the last quarter. And the company is projected to grow that to around 450 crores in the next fiscal. And so this is one of those companies in the new age space where, the path to profitability is a lot more visible. And the company has indicated that they would be, profitable on the PAT level in FY24. And by FY27, they're targeting a profit of 1,000 crores, primarily led by better profitability as well as the ESOP charges coming down. So at around 25 times, FY27 earnings, the stock doesn't look too bad at the current prices, considering they have about 5,000 crores of cash on the balance sheet as well. So this is one which we think structurally makes sense, could compound at 25-30% over the next 3 to 5 years. So that's something that we like.
Okay. Mithun, hi, good afternoon. Wanted to get your thoughts on the commodity side of the market, because the cues that we're getting in over there have been, shall I say, a little more inspiring at least than other pockets. You've got the Chinese data, which is completely fired up. Commodities, whether it's metals, even agricultural commodities, mostly on the higher side. Crude projections, for oil prices also on the higher side. In general, is there any play here beyond day-to-day sentiment? Are you looking at either, let's say, metals, ferrous, non-ferrous, anything on the oil and gas side, or even beyond, to make its way to the portfolio?
Yeah, I think one position that we've continued to hold and are quite positive are on Tata Steel and its subsidiaries. So Tata Steel is actually embarking on consolidating a lot of its listed companies into Tata Steel. And a lot of the Tata Steel subsidiaries trade at about 10 to 14% discount based on the merger ratio into Tata Steel. So we are quite relatively positive on Tata Steel from the current levels. And we think the route to play this is through the subsidiaries, be it Tata Steel, Long Products, or Tata Metallics, because both of them trade at a discount based on the merger ratio. Considering the improvement in the Chinese economy expected, I think the GDP growth came at 4.5%, and we do think that can provide some impetus for global growth, and domestically as well. I think the whole spend on infrastructure will help companies like Tata Steel continue to grow, and they have large expansion which will come into fruition in the FY24 as well. So there is some volume growth and improvement in profitability that we see. And the best way to play it is through the subsidiaries, since they trade at a discount, like I mentioned.
All right. Hi, Mithun. Good afternoon. Good to speak to you. Mithun, from the IT pact, Explio Solutions, I think that's the one that you've been holding for a while. Continue to hold that one, and given the kind of volatility, or given the kind of, not volatility actually, downtick that we have seen in the IT stocks, are you looking to get in?
Nigel, I think there has been volatility primarily because you saw Infosys earnings, which was a big miss, and the financial sector in the US is also mixed. Actually, the smaller banks are seeing pain, while the larger banks are reporting record profitability. So it remains to be seen whether Infosys is trying to be very conservative, and through the year they actually increase guidance. So we actually think maybe we're coming close to a bottom, maybe in the large cap tech stocks. We would only see further downside from here if there is a complete recession or something like that. Blown out recession happens in the US. Otherwise, we actually think this could be a buying opportunity in some of those large ones. But our focus has been on the mid cap IT stocks like Explio. And Explio, you would have seen recently the merger go through with its unlisted companies in India. So it will become a much larger entity. I think the record date for the same is 24th April. So post that, you will see a company with revenues in the order of 1,000 crores and profitability north of 100 crores. And this company is likely to targeted to double revenues and profits over the next 3 to 4 years. So I think it's well positioned.
All right. Yeah, we get that it's well positioned. Just wanted your thoughts on the building material space, because in the past you've been very bullish on Cera Sanitary ware. I just wanted to understand if you're looking at spaces outside of that as well, because today we're seeing a big move in all these MDF plays, plywood plays, Green Pallet Industries, Rushil Decor, all of them doing extremely well. So are you betting on, say, something like paints or plywood?
Yeah, Mangalam, I think, in terms of our portfolio there, we do have some exposures to paints as well, through companies actually like even Grasim, which gives you exposure to both paints as well as cement. Primarily currently now it's a holding company of Ultratech, but they are going to enter the paints business in a large way, and their operations will start in the Q4 of FY24. So that's one way to play this space through Grasim, because you do get Ultratech plus the optionality of the paints business. So that's something that we do hold and quite positive on. Apart from that, on the cements business, we tactically also added into Ambuja in the recent decline around the 340, 350 levels. Where we do think valuations look reasonably good on Ambuja's side.
Got that. All right. Very quickly, Mithun, you said Explio you'll continue to hold on to, but from the large caps, if you'll have to look at it, what's the pecking order out there before we wind down?
Currently in most portfolios we own TCS as our large cap holding. But after this correction, we are evaluating Infosys as well, because at the current price, it is looking quite attractive, considering its historical band of ratios. So we are monitoring it. We've still not initiated anything, But that is something that we are watching closely.
Well, appreciate you stopping by, Mithun, discussing all those themes with us. We look forward to having a chat with you. Wishing you a good second half of the day. Well, on that note, though, we'll have to slip into a short break. But as always, Nimesh is waiting for us on the other side. He'll tell us what he's picking up in